Good morning, everyone. I hope we can all hear me. Thank you for joining us today for the FinTech Outlook 2025. Um, Good morning, ladies and gentlemen, distinguished CEOs, captain of industries and change makers. Welcome aboard FinTech Outlook 2025. My name is Captain Toyin Olufon, and I'll be your captain on today's flight. Our flight time is approximately 1 hour 20 minutes, and we'll be cruising at an altitude of 354,200 feet, which is the highest altitude ever attained by an airline. On this flight, we do not have economy or business class seats. We only have first class seats. Please do not fasten your seatbelt, as this is an assured safe flight without any form of turbulence. This flight promises to be unconventional, insightful, inspiring, directional, and enjoyable, fostering commitments to the fintech sector's role in stimulating a $1 trillion economy. Welcome aboard, everyone. Before I continue, I would like to bring the president of the FinTech Association of Nigeria to give his opening remarks in person of Dr. Stanley Jacobs.
Thank you. Thank you very much, and good morning, everyone. Thank you, Ms. Toyin. I must confess that this will be the first flight that I'll be taking without a seatbelt. So thank you for putting me on this flight. It will be an experience. Just to welcome everyone, my job is very simple on this program today, and it's mainly to thank everyone for joining, and also to thank our speakers, our hosts that will be here to share very, very valuable insights. I see very good people we have on the lineup of speakers today. This FinTech Outlook is one that is very important and dear to the soul of FinTech Association of Nigeria. As we continue to unveil our program for 2025, we are already beginning to see a couple of changes, which we are communicating from time to time. And we are hoping that at the end of the day, it will be a whole new, better experience for all of us, more engagement to reflect our policy principle around participation in the PI agenda, more innovation to be driven by thought leadership and technology. And of course, this will consequently lead to expansion for all of us, both personally and for FinTech and NGR as an organization. So I'll just pause here and say welcome. Please feel free to participate as much as possible. I believe the program that Tony has designed is to allow the participant to speak as much as possible, share their thoughts, so that we keep it as more interactive. It's not a lecture session, it's not a lecture series, but it's more of an interactive session. So on this note, I welcome everyone, and I wish you all a very exciting time. Thank you.
Thank you, Mr. President, for that powerful welcome address. Thank you. Someone said, "Look, Captain Tony, what if the speakers shake tables along the way? Would seatbelt not be needed?" Trust me, the speakers we have on board, they have parachutes ready to catch anyone to ensure that nobody gets to fall. So, as I said, it's an assured, safe flight. Just trust me on this. Yes. So, in the spirit of Benjamin Franklin's timeless wisdom, he said, "Nothing is certain except debts and taxes." I would like to propose a Nigerian twist. Nothing is certain except debt and the movement of financial transaction. Please, do you all agree with me? So this is going to be a very interactive session. So the good thing also is that, so I'm looking at the chat even while talking to you. But the point is that in Nigeria, I think it is better to say that nothing is certain except debt and the movement of financial transaction, which we know is one of the heartbeats of what FinTech is all about. So it shows that FinTech has a critical role to ensure or to foster economic growth. Nigeria's goal of achieving a $1 trillion economy is an ambitious target set by the government with President Bola Tinubu aiming to double the country's economy by 2030. This objective is part of the broader effort to accelerate economic reforms and transform regulatory agencies. To put this goal into perspective, Nigeria's GDP currently stands at around 472. Please, can you hear me?
Yes.
Oh, okay. I couldn't see. All right, that's fine. I'm back. To put this goal in perspective, at the moment, Nigeria's GDP is about $472.6 million, according to the World Bank. And to reach a $1 trillion mark, the economy will have to grow at an impressive rate of 8.36% annually. FinTech play a pivotal role in achieving Nigeria's ambitious goal of a $1 trillion economy. FinTechs are expected to drive growth in the real sector and improve financial resilience through partnerships with banks. Leveraging technology, FinTechs can expand financial access, foster innovation, promote competition, ultimately contributing significantly to the country's economic growth. For today's conversation, we've put together seasoned experts in their field with experience. These are not just people that they talk, but they are walking the talk. You know, they are part of those that are presently transforming the economy of Nigeria, and they are panelists for today's session. Without much ado, so that we can get into the practical conversation, and I know that the audience, a lot of you have so many questions as well that you like to ask. So I'll just start by introducing our panelists today so that we can get right into the conversation. And the first person I'd like to introduce is Dr. Adekunle, who is the Chief Operating Officer and also the Chief Technology Officer at OPay Digital Services Limited. I'm sure there's nobody on this call that doesn't know OPay. They disrupted the markets. Right. And also is a pivotal figure in the Nigeria fintech space and one of the founding members of OPay. Please, can we put our hands together? Let's welcome Dr. Adekunle. Thank you for joining us.
Thank
Can you
you.
hear me?
Yeah, I can hear you. Thank you, Tony, and thank you, everyone. We believe and hope that this will be a great event today, and that we'll all be able to learn. Thank you. Pleasure to be here.
Thank you. Good. Theophilus, thank you for welcoming him. We have the chat box so that you people can clap there. Thank you. We have the second person I'd like to introduce is Olubumi Abayomi Olukunle, partner at Balogun Arad Company. Olubumi is a banking and finance lawyer and leads the technology investment and transaction team at Balogun Arad. He specializes in the UK and Nigerian banking and payments regulation, advising financial institutions, among others. Please, let's make welcome Olubumi Abayomi Olukunle. Please,
hello, everyone. I hope
yes,
you can hear me.
You. Loud and
it's
clear.
A pleasure to be here today. Thank you. It's great. It's a pleasure to be here today. I look forward to learning from the distinguished members of this panel and from the members of the association as well. Thank you.
Thank you for joining us this morning. The next person I'd like to introduce is Adenike Ali. She's the head of products at Pastel Africa. She's a product leader with over 10 years of experience across finance, e-commerce, and retail businesses. Please make welcome Adenike Ali. Hello, Adenike.
Thank you for hi everyone.
Great. Thank you for joining us this morning. The next person I'd like to introduce is Rashidat Adebisi. She's the Chief Client Officer at the Mansard Insurance PLC. She's an highly accomplished professional in the financial services industry, and she's currently serving as the Chief Client Officer and board member at AXA Mansard Insurance PLC. Hello, Rashidat. We are happy to have you on board.
Hi, Toyin. Thanks. Good morning, everyone. Looking forward to an exciting time.
Yeah, thank you. So I can see that we have a lot of, I have a very fantastic audience. They're really doing part of my job, and I just wanted to say thank you. I can see that you people, you keep clapping for them as I introduce them. You are the best audience that any moderator can ask for. Thank you, guys. We are not done. I'd like to introduce the next person, Otsi Inletame. I hope I pronounced your name very well, please. Otsi Ilentame, CPA investment principal. Yes. So Otsi Ilentame, CPA is a distinguished finance professional with extensive expertise in private equity, infrastructure investments, venture capital, and impact investing. It's a pleasure having you on board this morning. Otsi, please, are you on the call?
I am, yes. Good morning, everyone. Thank you for having me on the panel, and I'm looking forward to an engaging session today.
Oh, great. Thank you. So those are distinguished panelists for today, and we'll just dive right into it so that we have enough time to have, to have a robust conversation. And my first question would be going to Rashidat, please. I'll be asking you the first question. The fintech space, for the fintech space to thrive, it's important also that insurance, or the insurance industry as well, play their own role. So the first question I'll ask you is that what does embedded insurance and insurtech play in mitigating risk and supporting financial stability in a rapidly digitalizing economy? Because this is important. If we are able to achieve a high rate of financial inclusion, we must be able to create a safety net, for the people that are within the financial space, or they are within the digitalized economy. And that's why insurance play a very critical role. So please, can you share some of those roles with us?
Thank you very much. I hope you can hear me. I think always exciting to be the first one to start here. In the end, life is about protection. If death is certain, then it means that risks are certain to every one of us. I think in addressing that question, we need to think about what the $1 trillion economy means. It means doubling. You mentioned 8.3% or 8.36% growth on a year-on-year basis as a benchmark. And we're coming from only growing to maybe 3, at best 4% in the last few years. So what do I expect that would bring? Job creation, industry growth across different sectors for this to happen. And it also means we need to create economic resilience. In the end, what does insurance do? Create a safety net. I think very few people have the opportunity of being in a profession where you are protecting people, you are helping them to achieve their dreams, you are creating security, and at the same time, you make money, right? So when I speak to a community like this, the question is, what can't we do? We're typically limited by ourselves because some of the things that we believe needs to be done have been addressed already. Embedded insurance, as people like to call it, is a very funky name created in recent times, but I feel this has been ongoing for a while. It's really around how do we create, a seamless engagement? How do we leverage integration between partners, whether it's the company who is, the ride-hailing app for their drivers, for their, for the riders as well, whether it's an e-commerce platform for delivery, or even the solutions you're creating, protecting them from risks, as well as when you think about digital banking services, when you look at the payment service business, that has been really great, especially where people are feeling true impact. So where are we playing with InsurTechs? We see opportunities where we're offering things like, device insurance for assets. Medical, the health sector is where we're embedding micro health, for example. There are quite a number of initiatives that we're working on with payment companies, and we're discussing with other companies. Life insurance is, real. People don't like to hear in Nigeria that they're going to die. You don't wake up in the morning saying that you're going to insure. So how do we find that balance for you? How do we create that comfort? I also like to say to everyone on this call that you are all insurers one way or the other. Why? When things go wrong, you are the one that is actually creating the safety net for your community. They call you, they say something is wrong with your child. It's not really your child, but the person is called your child, or something has happened to their business and you are meant to help. You love your family, you care about your friends, but sometimes you are not able to support them financially. So for them to put away that small known amount for an unknown risk is something really that can create such big impact. So when we're able to create this sort of integration, we make a really, really big difference. Unfortunately, we've focused so much in the past on bells and whistles, nice looking app, nice looking delivery. The real thing is not the bells and whistles, I have to say to you guys. We need you to really create impact. When you think about when cash was scarce and people got what they needed, it made a real difference. It wasn't the design, it wasn't the influencer. So for us, we need to find partners. We're working and looking at opportunities, for example, in our company in AXA, where we have our innovation exchange. How can we really personalize risk assessment so that we can embed within a community? Who do we need to work with? How do we become more efficient? We focus too much on selling faster and easier. Well, how do we serve the clients when the risk happens? How quickly do we support them? So this is where the opportunities lie in this sort of economy. And the wave is going to be huge because people truly need this support. Why? Companies are getting the support now. I call companies the chop and clean out crew, because companies are getting claims paid, they're being supported, but individuals are not. Millions of Nigerians are, exposed, and we have to be the ones to support them. So how can we change this behavior and move them from relying on your own family support only to making sure that the insurer is the one who is supporting them and creating a big difference? I think this is really where the opportunities lie. So yes, payment looks sexy, but truly InsurTech is that opportunity, or even a fintech who is supporting and creating solutions across our value chain. This is where we can make huge impact in the delivery, in the ecosystem, in the customer journeys. So transparency is still an issue. Understanding what you're covered for and what you can pay to increase the cover is still not really there. It almost seems like it's opaque sometimes, even when it's there. Why? People don't want to read so much. So in embedding, it's easy to be able to embed, but how do we create the right amount of transparency, understanding, and delivery? So this is still where I see the opportunity and where the risk mitigation is still critical for us, and where we can make a difference. So honestly, the opportunities are boundless. I know we have time constraints as well to it. So maybe I'll hold back some of the fire and not shake too much of the tables. But I'll just say to you that if you feel that this is an area where you can make a difference, we truly need the right relationships, whether it's with the banking sector, literally every sector, from prop tech to insurtech to health tech, all of these sectors. And we've been doing stuff on the fintech sector. I think maybe later as we answer questions, I can talk about the examples of how we've changed things. We have failed along the way as well. I must say to you, there are times when things didn't work well. But are we committed to making a difference? I would say yes, the industry is committed. Our organization continues to work in this space. And we can truly help and improve the lives of Nigerians and remove the burden from all our shoulders so that we're not the first people they call when something goes wrong. Thank you very much, Tony. I hope that helps.
Yes, it does. I think before I let you go, please, can you give us one example? I mean, a practical example regarding how you're working with fintechs to mitigate this risk and to support financial stability.
So I think I'm sure that mentioning names would be tight sometimes, but right now, I think last year we were able to create, protect over 500,000 people just by embedding in the ecosystem of a payment company, a micro health insurance. they are able to actually insure themselves for telemedicine, which means that they don't need to walk to the hospital to go and, meet a doctor. Usually people at the inclusion level, people like to call them micro. I believe that they're really never micro, because hopefully they're going to evolve and emerge through, the economic value as well. So we're able to offer them telemedicine. So they don't just say, I think I'm feeling unwell, let me just treat myself for malaria. That's one big difference we made. And we've seen the level of consumption increase from when we worked with a telco company, to offer, for example, our accident cover and sort of life death cover in the past. We're now doing things on the healthcare sector. So we're working with a tech company who is also working on delivery as well. So we've improved the engagement, the ability to access a doctor at any time of the day at all. That's very different. I mean, it's probably one of the first times we've seen that amount of traction. We've seen an improvement on the utilization, because sometimes that's also where the challenge is. You embed things, people are not using it. So you're asking why? How can I make them use it more? Because it's from the usage we get feedback and we are able to improve it. We're also able to, we worked with one of the company slots, for example, in this instance, where we are able to also literally sell for you screen damage. Screen damage is one big issue that people have periodically. So being able to not just have your phone, sort of repaired, but picked up, repaired, delivered back to you, all from the same point of access as well. So the healthcare has been probably the most engaging one because of regulation. Regulation has been a bit easier on the health sector side. And we've also embedded health insurance, with data, with one of the telcos as well. And we're also exploring similar type opportunities. So there's the embedding inside. But of course, the challenge will be, are you making sure that they know what they're doing? Most times, freemiums become challenging when it's time to pay. How do you make it a business case? So this is where you have to think about it, taking it beyond when it's free. And some of the most successful ones, PalmPay in this instance, where we've been working with them on, we're actually seeing people pay for it. It's not free. So that's very different to have 500,000 people pay. And this is in Nigeria, where the total number of insured across board, including health insurance, is probably about 10 million. Right? So last year, we closed maybe about 1.8 million policies across this sort of inclusion opportunities with different partners. So that's quite different. And we're seeing the level of traction. What does it do for the partner? It creates stickiness. It creates option. It also means that you care about your clients. You're also able to manage their payment solution there, because the ease of payment becomes an issue. You also want to be in an ecosystem where people are trusting the brand, because the brand trust is also important. But it means that we need to deliver better. So these are some of the sort of challenges we had to deal with, Tony. And I guess some of the examples I can definitely share with you. And we're always open to do more as AXA, of course. Thanks.
Thank you so much, Rashida. I've learned a lot from you. And thank you for sharing those practical examples. I'm certain also that there are FinTech CEOs and the other CEOs as well that are on this call, that I'm sure they're already seeing they are seeing points of alignment, with the things that you do as well. Thank you very much. My next question, we don't have so much time. If not, I actually enjoyed chatting with you. I would have asked you more questions, but let me move to the next question. My next question is to Otsi. At the moment, let's say of recent rather, it appears as though there has not been as many funding as there used to be, in the VC space. However, it is important that for fintechs to be able to scale at the level that it would drive national economic expansion, funding must be available. They must be able to access funding. It's very critical for them to be able to scale. Now, my question to you is that what are the investment strategies and funding models that you think are essential, to scale fintech solutions that contribute to national economic expansion?
So it's a good question. Thank you, Tony. You are right that in identifying that, over the last 2 years, I'd say the funding environment has been tighter. And of course, that has been because of a number of issues. We've had difficult macros in Nigeria. That's one of them. But I think in general, we had the boom years. And as you know, economic cycles go that way. boom, we peaks and troughs, as it were. So that certainly affected the Nigerian fintech space in particular. But I don't necessarily think it was a bad thing, or it is a bad thing, because I think at the moment, for example, the FinTech Nigeria Association states that we have about over 200 financial technology companies in Nigeria. This was as of 2023. So it's probably even a bit more if you include 2024. In my estimation, that's too many, if we start from there. So I think, yes, I think we need to get to a point now where we don't have 10, 15 companies trying to solve the same problem and citing the size of the addressable market as a reason why 15 companies trying to solve the same problem exist. So I think, and this is part of what the funding winter, as we call it, has done. It's helped to separate the wheat from the chaff, meaning you now have fintech companies that are more focused on, their value proposition. You now have companies that are even more focused on a specific area of financial technology. And I think Rashida makes a very, very good point where we've seen an increase in embedded finance products, which are financial technology, but housed within a different type of business model, and that also needs to be considered significantly. And we at Alithia have been, been critically looking at the embedded finance space and have deployed capital into a number of companies that are focused on that space, and I can give more detail as we go. So to answer your direct question as to the funding models that are required, I think, look, the funding models that exist are still necessary. Now, are still applicable. Now, how can fintechs attract that capital? It goes back to what I was saying earlier. The ability to execute, to clearly define the problem in which you're looking to solve, and to execute better than the next 5 people, as it were. And of course, that is not just a function of capital. It's also a function of your understanding of the marketplace. It's also a function of designing and building products that are actually fit for purpose and not just for designing's sake. It's a function of not solely focused on growth, but also on running sustainable businesses, sustainable financial technology businesses, because that is what will leave you. That's what will make you more attractive to an Alithia or an investor to keep investing and funding, and then of course ultimately growing this ecosystem. For example, we got about $2 billion into the fintech space last year in Nigeria, but about 800 million to $1 billion alone went into MoneyPoint. And that's not by accident. It's their ability. They've been able to execute. They've been able to show traction. Hence, they're able to attract more capital. So we need more, fintech companies to focus more on, again, I'll keep saying the word execution, and on really providing products that actually are in demand by the customer, and then that will lead to this $1 trillion economy which we're looking to achieve. And of course, going back to embedded finance, as a company, we invest in a company called Omni Retail. Omni Retail is providing or is bringing SMEs with manufacturers and distributors and making that process of sourcing for these SMEs more seamless. And within that is now embedded finance. In that whole, it's able to embed finance in its product offering. So now these SMEs don't necessarily have to spend from their cash flow to access financing, to pay for products. So if you have more of that sort of embedded finance programs going into different companies, and then you're able to then achieve this $1 trillion economy, it becomes more achievable and becomes more attractive for us as an investment or as an investor to actually put money in these businesses.
Thank you. I think something you kept talking about is execution and ensuring that your product is fit for the market. So any fintech CEO listening to this, I hope you got this feedback. Okay, we don't have so much time. I'll come back to you, please, if you don't mind. let me move to Olubumi. I'll be asking Olubumi the next question. I, for one, I've seen fintechs requiring that I use my thumbprint or I use facial recognition, for some of their products. And I'm usually skeptical. In fact, let me be truthful to you. I have not used anyone. The moment I download a fintech solution, and that is one of the requirements, I just dump it. And why is that? It's because to a large extent, I don't feel I'm protected enough to be able to give that level of data, to the fintech. However, we know that, I know that these fintechs are just being innovative as well. It makes your life easier if you want to open an app and you don't need to be typing in your username, your password, and you just use either your facial recognition or your thumbprint and it opens. Of course, it makes your life easier and it gives the ease of using that product, basically. Regardless, how can regulatory framework balance innovation and compliance to accelerate fintech-driven economic growth? For one, I think that this is like a bottleneck that is not allowing fintech to scale, especially, as I said, when it comes to innovation in certain ways that the populace do not feel that they are protected enough. So how do you think that we can balance this to still ensure that, innovation is driven and compliance as well is there to accelerate fintech's fintech-driven economic growth? Olubumi, please, you have the floor. Please, can you hear us? Are you still on call? Are you on this flight with us? I believe you are.
Yes,
oh, great.
yes.
We found you.
I'm on this flight with you, 100%. Great question. Thank you very much. I'll answer the question from a data privacy standpoint and from a general standpoint of balancing compliance with innovation. Now, from a data privacy standpoint, I think that there is nothing to be afraid of or to be concerned of from a regulatory standpoint. And the reason is because we now have very robust data protection laws in Nigeria, right? You may have come across some news rounds or potentially what you call DPCOs reaching out to you, to your companies, asking that they want to help you conduct a data privacy compliance audit. That's because the current law that we have in Nigeria requires all companies to conduct annual data protection compliance audits, right? Ensuring that companies comply with data protection laws and essentially trying to give comfort to users that the data that's being collected is used according to the requirements of the law. So from a legal standpoint, there isn't much to be worried about. It's still early days in terms of compliance, but the NDPC is doing a lot in ensuring that companies comply with data protection law. As a matter of fact, the requirement to audit yearly is significantly, in my view, higher than the European standard of data protection audits, right? There's a requirement under the GDPR to conduct annual data protection audits and to submit the reports to the regulator. However, in Nigeria, we have to do that. That in some way, that highlights the seriousness with which the regulator in this case is taking data processing by fintechs and by other companies. So yeah, I think that from a legal standpoint, we're covered. We can discuss the extent to which different companies comply, but we've plugged that hole to a reasonable extent in Nigeria. Now, to speak to your question about balancing innovation and compliance, I think there are a few key points that jump out at me. It's a packed question, but I think innovation would always go ahead of compliance or banking and finance regulation. It's not due to any type of inefficiency on the part of the government. I think it's just the way things are. Certainly, the things that the CBN, for instance, can do or regulatory agencies can do to sort of bridge that gap. But ultimately, innovation would always go ahead of regulation or compliance. I think that's the first thought I'd like to express regarding that question. The second thought really is that most times when we frame the first question, we tend to frame it in a way to put pressure on the regulators to catch up. But sometimes as well, we need to help fintechs understand that fintech itself, the business or that vertical, finds expression within the general framework of banking law, right? And so when you're building, it's important to have to build that to build your product with that in mind, and to find experienced counsel to help you comply. Because at the end of the day, banking laws have been here for as much as all of us have lived, I imagine. And as I said, fintech law is only a subset of banking regulation, right? The regulator, at the end of the day, has to balance the competing interests of different licensees. You have the merchant banks, you have the fintechs, you have the commercial banks, you have the MFBs. So it's a delicate balance that the regulator has to deal with. So I think that point we don't talk about that enough, i.e., the extent to which fintechs need to deal with compliance in mind. However, I think that the government also has a lot to do because, again, they're one of the greatest beneficiaries. If, for instance, we see fintechs doing what they're supposed to do or contributing meaningfully to the GDP of the economy. From a CBN, there are three thoughts I'd like to express very quickly. I think the first one would be to see more interagency cooperation in terms of regulating fintech, because you see, fintech is one thing, but then it's also divided. Well, there are different expressions of verticals within the fintech space, right? So you have insurtech, which is regulated by NICOM. You have the guys who invest and the like. You look at SEC. You have the core payment guys or the lendtechs who are regulated by CBN or the respective money lender authorities. I think that the fact that we have different agencies to some extent it negatively impacts the extent to which fintechs can quickly understand the regulations and comply. So if you ask me, I think that one of the ways to bridge that gap between compliance and innovation is to see more collaboration within those agencies, right? Whereas in the UK, what you have is just one agency regulating all those sectors, so to say, right? We have separate agencies in the country, which is fine. We can discuss whether that's ideal, but I think going forward, we want to see more regulations that apply to fintechs. And very quickly, I think that if we're going to build a trillion-dollar economy, we need to commit. That is an economy that sees the delivery of public and private goods via platforms, right? Public goods, I can talk about public goods. For instance, with CBN, we've seen that a lot of innovations they've introduced have been via platforms. We want to see more of that. I think about 2 years ago, they launched a platform that would help microfinance banks to register and get their licensing online. We want to see more of that. People need to be able to go online and register and get the permits that they need to do business. With some of the other regulators we've dealt with, an important issue is that we still see a lot of human interference, such that agency A has a platform. You go to that agency, you register, but it's still possible for an employee of the regulator to hold back your application, such that you need to back channel to ensure that your application moves ahead. If we're going to build a platform economy, we need to ensure that those platforms are real platforms, right? We need to limit the impact of human intervention, have regulations that make it impossible practically for any employees of the regulator to sort of try to make nonsense of the essence of having a platform in the first place. So yes, I think that we need to commit to a platform economy, and we need to commit to reviewing the policies and the ideas that we have already. For instance, the CBN, I'll round off in a bit. The CBN, I remember, introduced a sandbox regulation, the idea of which is to encourage, have a sort of preliminary sort of sandbox where you can give preliminary licenses to founders that are pitching innovative products. Now, I think it's about 2 years now. We haven't seen any reports on how that platform has progressed to at least know what the challenges are and what needs to be done, right? In my view, I think that if we're going to bridge the gap, some of the existing innovations that we have, we need to periodically review them to determine what data points we need to build back into the system and to essentially make them more useful in the ecosystem. I have a few more thoughts, but I'll yield the mic at this point. Thank you.
Thank you so much for your robust response. I'm sure our notes are full. Let me move to the next question. And my next question is for Dr. Adekunle. My question is straightforward. How can fintech innovations drive financial inclusion and economic growth to support Nigerians' journey towards the $1 trillion economy? To a large extent, that's what you have done with OPay. So we'd like to hear your thoughts.
All right, thanks a lot, Tony, and good morning, everyone, yet again. I'll say that one of the first things that we need to consider is that if you look at the economies that have had tremendous growth the last 2 decades, China, India, Brazil, Singapore, and we look at all these economies, we will find that at the core of those economies, where they had tremendous growth, was the presence of fintech companies or fintech or payment solutions that really were responsible for driving and being the rails upon which we see that growth. In China, for instance, we see the emergence of Alipay and WeChat Pay that really turned China into a pure cashless economy. In China today, even beggars do not collect cash from you. The way we have, when you go to shops today in Nigeria, and then you have MasterCard accepted here or Visa card accepted here, you have to struggle in China to find a place where they say cash is accepted here. That's what they have. Someone that accepts cash has actually paste a sticker to say cash is accepted here, because payments have already gone fully digital. Similarly, if you go to India, it's the UPI that has been implemented, and Paytm have really revolutionized the way payments and financial services are conducted all across India. In Brazil, of course, we know Nubank and what they've done to revolutionize the way payments and financial services are carried out. So these countries that really experience tremendous growth in terms of their GDP, getting financial inclusion done, were powered by FinTechs. If Nigeria is going to have the same ambitious goal that we have of achieving a $1 trillion economy by the year 2030, it means that we do have to encourage and empower the existing FinTechs and more players to push towards that dimension of powering this growth that we're looking for. Now, to come to the question in proper, it's that for this growth to happen, there are several roles that FinTechs have to play and things that they will have to do. Number one is financial inclusion. Today, the typical domestic worker in your house, the typical domestic worker in your business premises, the typical taxi driver on an Uber, the typical gateman, and all those kind of people would have an OPay account, a PAMPay account, a MoneyPoint account. The typical young boy, young girl going to university would have an OPay account, PAMPay account. It shows that the real inclusiveness that has been relatively unachieved by the traditional financial institutions have now become something that has become realizable because of the presence of FinTechs. And so the first thing really is financial inclusion. Bring many more people into the financial ecosystem, into the formal financial system. Many people are opening these FinTech accounts for the very first time. That's their first financial service tool, their first app, their first bank account, their first way of having anything at all to do with the financial ecosystem. And that's something that has to keep on growing, and FinTechs are still responsible for going forward. Now, that is really, financial inclusion is really the foundation. On top of that foundation, we now have to build the strengthening of SMEs. A lot of people today, or small businesses today, depend on FinTech applications to have access to credit, to be able to get, they will not be able to get credit through regular financial institutions. They don't have a track record. They don't have a credit history. We don't have any data about them, right? But with the FinTech apps, who give lower entry barriers, they can look at their mobile data usage. They can look at the way they spend and transfer money. They can look at their income levels over a period of time, and then access to credit becomes something that is easy for them. Number three is in the area of payment enabling, right? Imagine that farmer who stays somewhere in a village, somewhere far off, before he could not sell to anybody that was distant away from him. He could not participate in e-commerce, social commerce, mobile commerce, or any such thing. But today, because he has an OPay account somewhere, he's able to advertise his good on his WhatsApp status. Someone will say, I want to buy 2 bags of yam. There are logistics companies that are available, that FinTech has made available, that can pick up stuff from wherever he is, deliver it to the person, and he has an account, a wallet account, or a virtual account. He can receive the money immediately. And these are things that are already happening. Imagine if it continues to scale. Imagine how far this can go. So expanding financial inclusion, strengthening SMEs, enhancing payments, driving investment and capital mobilization. These are some of the things that FinTechs can enable, and they can continue to enable. Today, I see if I open my PiggyVest app, I'm seeing companies that are selling land, or companies that are doing agricultural innovations, and then they're asking for funding. And PiggyVest has democratized access to funding. Now, I don't have to have a big proposal and go to one big company somewhere to now know how to get funds. I can really just from wherever I am access a FinTech app and be able to. So if we look at all these things, right, it's revolutionary. Financial services, financial technology players are really changing the game, and they become core to what we have to do. Right, I hear one of the speakers mention that, yes, there are too many people doing the same thing, repeated services that they're offering through FinTech. And while that is true, we cannot stop that. I think that there is still more room to play. We need many more. If there are 200 today, let them go to 400, let them go to 500. What would happen over time is that there will be consolidation, there will be mergers, there will be acquisitions. There are niche markets that nobody can play perfectly in, that somebody else will just play better no matter what. There are some small companies that have only 20,000 users and they are doing fine. And yes, there is OPay that has 40 million users and it's doing fine. And there will be things that I would not be able to do as OPay today. You bring a solution, why don't you integrate? It makes sense. And I was like, it's not cost effective for me, but I'll be that 20,000 player who has just 20,000 users that'll be able to do that service and make things happen. So if we look at this and if it continues to grow at scale all across Nigeria, get down to the bottom of the pyramid, get down into the nooks and crannies of society, we'll see productivity everywhere. There'll be more businesses, there'll be more businesses that are supported, more businesses that are funded, more jobs created, everything working together to make a much, much stronger economy. So $1 trillion is achievable, but fintechs are very key to making this happen. Thank you.
Thank you very much for your well-rounded responses. Thank you. Let me move. As the captain, I also have the responsibility to manage our time. So my last question for now goes to Adenike. And within the last 2 years in the news, we've read about cyber attacks against banks, fintechs. So my question to you is that with the rise of digital transactions, how can fintech sector strengthen cybersecurity to foster trust and prevent financial losses? Because this is very important if we really want to achieve the $1 trillion economy. Adenike, please, you have the floor.
Yeah, thank you, Tony. Listen to what everybody has said. I'll piggyback on like key things that each speaker has said. I would start with what Rashida said. Everybody's building something sexy, something nice. Like everybody, I've heard like numbers flying up and down, and I think the critical thing is for me to even start with the numbers. Like globally, we're projected to have like $10.5 trillion lost in cybercrime. And that is like from cybersecurity venture. And per second, all these crimes are happening like within 2 seconds. And that is like projected in 2031, like every 2 seconds, like a cybercrime is happening. And let's bring it down home. Like according to NIBS, there's been a year-on-year growth from 2019 to 2023 as in terms of like lost money lost to cybercrime, and it started from 2.3 to about 17.5 billion naira in terms of like cyber money lost to like cybercrime and all that. So I think everything starts and ends with us. Everybody has said inclusion, but there's the, let's say, teaching. According to the data from NIBS, people above 40 years old are like the key targets to cybercrime. And that I can just play a scenario. A text message is sent to my mom. My mom sends it to my sister. My sister is sent, and it goes on and on and on and on. And those are elements of like social security and social engineering. And that's like the biggest thing for cybercrime and cybersecurity. So I'll start by saying that what can the fintechs do? Start by teaching grassroots, from the grassroots to the top, to even like the engineers, like even working, and the team, the customer service people, and even down to the market woman. If you see a link, don't click it. If somebody says, share your BVN, don't give. If somebody says, I will give you XYZ, fill this form, you have to protect your data. You have to protect your devices. You have to protect everything that has to do with your identity. And it starts from there. So I would say my thoughts will be in four spaces, and it will be education. We start by educating the market woman, the agents, down to even like the key stakeholders. If you check it globally, like email phishing and the likes, nobody is actually like God when it comes to like that. You see a CEO clicking a link because it comes from finance. Oh, sir, please approve this thing. And immediately ransomware is put into the system and everything is shut down. So next to collaboration, a lot of these attacks are also organized. And a lot of these things, once a fintech starts or once a fintech comes to the market, these agents, I'll just call them agents, know that, okay, these people are newbies. They're probably not speaking to OP, do you understand? To teach them what to do or even share their stories in terms of like what has happened within the system. So they will play the same scenario, the same game plan they've done from OPay, Money Points, Ampay, the likes. They go around and they do that. And why is that? Is because like we're not sharing information. There's no collaboration in terms of like, okay, all these agents. One thing that I know that my team and I have also been trying to work on is to see how we can actually drive foster collaborations within all the players, the key stakeholders. If we have like a, for instance, like a blacklist that says, okay, player A is like known for like serious attacks and known for XYZ, player A doesn't need to come to Money Point and be onboarded or come to OP and be onboarded and the likes of that. So if we have like a collaborated, would I say, data point somewhere where people are going and actually saying it, it would help. Also, in terms of like CBN, I know CBN actually like puts like compliance metrics and compliance tasks for like fintechs to do. But how are they fostering collaboration as well? Like we're hearing that, okay, what the different licenses are going around and people have to like do certain compliance things to get those licenses. But are they also fostering collaborations to saying, okay, go on study from Money Point or go on study from OP or go and do this from this before you can get this? Do you understand? So that is like the second part, like in the collaboration parts. There's also the talent space too. Yes, I know the lives of Google and Amazon and IBM are also like trying to put out like materials to teach people on cybersecurity or how to be a cybersecurity analyst. But if we drive it home, how many cybersecurity analysts do we have that are like top notch? Do you understand? So in terms of like talent managing and training and also making sure that people know, people that are doing this work, people that are actually like serving, will I say, the underserved or the underbanked, know their jobs and know what to do. And the last thing is also having the right and updated system 360. Because of time, I would just break it down into like, there are different kind of, I'm sure Mr. Olu would actually say that there are different kind of legal and also like would I say industry certification and infrastructures that people need to put into play, transaction monitoring, anomaly detector, all those things are come to play, like a PEP and sanctions list. I can list a lot of things that most of the fintechs are actually not even incorporating into their day-to-day operations. And that also increases the amount of cybercrime and cyber related activities that goes on. So with these 4 points, I would say that if the fintechs and also the, the bodies in charge actually put out all these things and try to ensure that we do at least 2 or 3 out of these 4 points that I just mentioned, we will be able to ensure that the fintechs plays a good role.
Thank you so much. Thank you for your practical, for the practical points that you've shared with us. And I'm sure that stakeholders have taken notes and they'll put it into use. Thank you. So let me just jump into your questions. I can see that we have quite a number of questions in the Q&A session. The first one is from Annie Khan Ezekiah. If fintech is going to make a visible difference in the drive to a $1 trillion economy, we need to know exactly what our current size of contribution to GDP is and by how much we need to grow year on year to 2030. 2030, the year Nigeria set for attainment of the $1 trillion economy. I agree with you. I guess that FinTech Association will look into this. It's saying that we should have a separate data for the FinTech industry to know the rate at which what we're contributing to GDP and use that to determine the rate of growth. I'm sure that the FinTech, the governing co are listening, they've seen your question and they've taken notes of that. To the second question, okay, this question is to Rashidat. Please, Rashidat, be ready to answer this question. Samuel is asking, with the rising level of cyber threats, which could pose a threat to achieving the desired $1 trillion economy, how well is the insurance company positioned to mitigate this challenge, as most fintech still considers cyber insurance as less important? Rashida, do you want to take that question now?
Happy to take that. I think I'll probably speak in a little bit of what Adenike had mentioned before about cyber risks. There's definitely a huge opportunity around cyber insurance. The industry is already positioning, but there's still quite a number of things to do. This is one type of policy where it's not about the insurer just giving you some cheap price. There is awareness as spoken about, because most of the issues comes from bad practices, not following through, not having, multi-factor authentication, some of the basic things that are needed. So there is a training, there is a skill development, there is the proactive addressing of the cyber issues that we need to deal with, whether it's from a DevSecOps methodology sort of framework, the penetration test, not just keeping your solutions too exposed. That's another area where we've seen, people have cyber issues or risk being exposed as a whole. And then we have the regulation. So from the regulatory side, we're working to shortlist, the right kind of consultants who would help to do the assessments, as well as the continuous vigilance. Cyber insurance isn't that space where you only just, pay for the insurance once and it's only when something happens. It is real. You can't transfer your problem. Imagine just going to a market, opening your car, leaving the car key, right in that space for anyone to take opportunity to take your car away. So if that is what you're doing, then insurance isn't going to work for you. But where we're seeing the opportunity insurance is where we're designing solutions that can help, especially SMEs and many players and individuals, to improve their level of vigilance, to ask the right question before they click on a link, for something to tell them that this is external, this has something dangerous, this has something you shouldn't do. And imagine if we can use AI, large language models, to make it even more customized to your language, to Pidgin English, to Yoruba, Igbo, Hausa, and any other African language. This is really where, I'm dreaming and looking at opportunities. So there's an area here. We don't have a lot of solutions available because the partners aren't there, but there are new partners coming into the market. I'm hearing that there will be some regulations shortly where it would literally be compulsory for anyone within, the financial and sort of like fiduciary responsibility will be forced to have some level of cyber insurance. So watch out for this space in the next 12 months. I have to say that to you ahead, but you can start yourself also. So I'll stop here, but there's just so much. And please remember what Adenike said. There's a lot to do with our own practices as well. Thanks.
Thank you for that. Ezekiah also dropped a question. Should we expect to see some form of consolidation in the fintech subsector, the way we had in the banking sector, given that there are too many fintechs doing largely the same thing? Is fintech NGR willing to champion the drive for consolidation? I think Dotun answered, part of this question. But when Dotun is answering the next question relating to him, please just make mention of this. I think he talked about collaboration, basically. Because of our time, I will just move to the next question, please. So someone is asking, Chioma is asking, please, do we need the terminology NDPR or NDPA while creating data protection policies? Is there a difference between both, or has one terminology replaced the other? I think, Olu, I believe that this question you should be the right person to answer this question.
Yes. So the initial, can you hear me?
Loud and clear.
Yes. So the NDPR is still active. But the distinction between the NDPA and the NDPR is that the NDPR is the first body of regulations that were issued by the NITSDA to regulate data protection in Nigeria. From a legal standpoint, it's really an administrative instrument. But then the NDPA is a law passed by the National Assembly, right? The NDPA came after the NDPR. And so to that extent, both legal regimes are still relevant, especially because the NDPA also refers to the NDPR and essentially validates the existence of the NDPR. So the NDPA, as I said, is a very comprehensive legal framework passed by the National Assembly. But the NDPR is also still very active in Nigeria. I hope that makes sense. Both frameworks are still active. Yeah.
Thank you. Theophilus is asking this question. I'm aware that professional industry organization has this or plays a vital role in shaping regulations. Currently, Nigeria has the most expensive financial requirement for virtual asset crypto operation license, standing at 30 million licensing fee and a minimum paid up share capital of 500 million. An ongoing amendment keeps it at 150 million license fee and 1 billion minimum paid up share capital, among other payments. What is FinTech NG doing to make sure that this kind of outrageous financial requirement for compliance does not stifle innovation? Doctor, it seems this question is for Doctor, or if any of our panelists have a response to this question, please, you can go ahead. Dr. Stanley, would you like to speak to that question?
Okay, thank you very much. I've been trying to unmute, and thank you. So I think this question particularly ties into our PI agenda. There are a couple of programs that we carry out today. Some has to do with cross-industry collaboration. I'm sure, I don't know if the attendee or the participant who has a question knows of the Regulator Forum, where we bring together the regulators to collaborate and discuss what's happening with the regulation, we ideate, where do we need to tweak, what is the impact on the business. The Regulator Forum has been there for a while now. We also now have collaboration with other industry bodies. Some of them even sit on our governing council today. And there is no better way to define collaboration. And just to also point out that FinTech NGR, being an ecosystem body, brings together different regulators beyond payments to insurance to investment and the rest of them, right? Communication, the telecommunication. So what we do is that we take regulation from a very proactive approach, right? We don't wait for regulations to come, then we begin to engage and say, this thing that is here, this is not how we want it. We are proactively discussing with the regulator through the Regulators Forum and other forums that we are involved in, where we share the pains. And in some instances in the years past, we even drafted whole regulations and given to the regulators to collaborate and say, this is what our from a thought leadership perspective. So we continue to do that. And right now, as we go into this year and the years ahead, our focus is not just in terms of making regulations easy, but we're also focusing on compliance. Right now, part of what we need for us to achieve the 1 trillion economy, compliance is also a part of it. Compliance is going to help us ensure reputable fintech ecosystem. Compliance is going to help us safeguard shareholder value, so we don't have fines and so many things that could bring institutions down. So part of what FinTech Nigeria will be doing is compliance, in addition to making the regulatory environment a more friendly one. We think that when we do that and ultimately evolve into a self-regulatory organization, we will get better. But these are the areas that we are looking at this point. Thank you.
Thank you, Doctor. Anonymous is asking this question. With over 90 regulators in the UK and at least 133 in Nigeria and counting, one has to ask, is regulation really the problem? If excessive regulation were the key to economic success, Nigeria should be thriving. Instead, we have a struggling economy with a weak GDP, while countries with fewer regulators operate more efficiently. Do we truly need this many regulatory bodies for a third world country, or is the real issue inefficiency, bureaucracy, and poor enforcement rather than the sheer numbers of regulators? More regulation doesn't always mean better governance. Sometimes it just creates more red tape. Would love to hear different perspective on this and what you think. Okay, in a minute, Olu, please, you respond to this, but I want to add this question to your to the questions you're going to respond to. CBN policies on crypto, mobile money, and digital banking often create uncertainty for fintechs. What specific regulatory reforms are needed to balance innovation, security, and financial stability in Nigeria's fintech space? Olubunmi, please go ahead and answer this question.
Thank you. The second question, I'd have to charge for that. That's a lot.
I like that.
That's a handful. That's a handful. I was just joking, but I'm not sure that we can do justice to that question on this call. But to multiplicity of regulators, I agree with the commentator. I think that there are pockets of inefficiencies here and there, but I also think that fintechs have a role to play as well, right? The point I made, one of the first points I'd made was that, even though regulators have a role to play, fintechs also need to take compliance very, very seriously. And I think that will be my response to that. Yeah, I don't think we have too many regulators. We're still a largely growing economy. There'll be different aspects of regulation that will become more relevant or prominent as the economy grows. If we need a regulator in a particular sector, absolutely, we should go for it. But as I said, fintechs also need to make compliance a primary consideration. I think the other point I can add to that is that in growing the economy, we cannot also just rely on government policies or the regulators, right? Industry associations like FinTech, NGR, and the like, this kind of associations also have a huge role to play, because you see, many times government can't move fast enough, right? And I could give one example just in closing, right? If you look at the court system we have in Nigeria, right? It would appear, or some of the decisions made by the courts, it would appear that our judges sometimes, not all the times, tend to favor borrowers or tend to look to borrowers with pity, right? Not seeing the bigger picture, which is that if you default and you're not able to pay back your loan, it trickles down. It affects the entire economy because the guy that has lent you money has gotten that money from some other person as well, right? Even if you get your judgment in Nigerian courts today, it's a Herculean task to enforce that judgment to get your money back, right? So if you look at that reality, it may take years for regulation to get down to ensuring that debtors pay their what is owed, right? But industry associations can do a lot more in making that system efficient, right? For instance, industry associations can set up an SPV that is solely focused on recovering debts, right? Industry associations can have a private arbitration system based on the contracts that lenders sign with borrowers, such that when disputes arises, there can be quick resolution of those disputes. If a judgment needs to be given, the decision of the panel is binding on parties and it can be enforced immediately. So yes, I don't think that we have enough regulators. I agree that there are inefficiencies in the system. We need to work on that. But I also think that as is the case with many developed countries, we also need to ensure that as an industry, we look for the problems we have. If we need to raise our contributions, we contribute what is necessary to plug the gaps in the industry and make the industry work for everybody. Because at the end of the day, if people don't pay back their debts, right, we're not going to get to $1 trillion in terms of economic output. It's going to be critical. So yeah, that would be my response to that.
Thank you. So okay, I'm going to merge these two questions together, and Dotun, please, this question is for you. I appreciate that you respond to it. For the rise of fraudulent bank transfers, forcing businesses like the Place Nigeria to discontinue the payment option, how can fintech companies and regulators collaborate to enhance trust, security, and real-time verification in digital payments? And I think, okay, yes, then the second question is the first question I had read before, where Ezekiel is asking that do we expect consolidation in the fintech sector, the way it has happened in the banking sector. Dawson, please, can you answer this question?
Thanks, Tony. I'll say that, yes, that will be consolidation, that will be mergers and acquisitions. I already hinted it a while back. Last year, we saw Brass, for instance, that was acquired by Paystack. Last year, we saw this other company that was acquired by Fair Money, I believe. So we're already seeing that happen, and we expect that as we go into the future, see more and more of that happen. Like I mentioned before, that will be players who are specifically good at certain areas of the market. And if as a bigger company or as a company that is focused on that area, I see some value in that area, then we're going to propose a merger and an acquisition. So that will only happen. That's natural. I will see more and more of that happen over time. Yes, there are egos that play. I think Nigerians have lots of ego. People don't want to yield up their control of the organizations. But I think as we mature in the fintech space, we'll see more and more of that happen. The second question, which is around the how do we work together with regulators to ensure that fraudulent bank transfers and things like that do not continue to become an irregular occurrence. I think that we need to do better in terms of compliance and security across the ecosystem because of the ability to just innovate. I think a lot of people don't pay attention to security from day one. And we need to, I think the FinTech Association can also start driving that from from an advocacy kind of perspective to see that we need to adhere to certain standards when it comes to security. Because what the funds that we hold are not our funds, they're the funds of the common man on the street. They are hard-earned money, and so we have to demonstrate much more greater responsibility in looking at how we take care of these things. Yes, Nigeria is a place where there's lots of internet fraud. There are lots of innovation. AI now even increases that. A lot of innovation when it comes to fraudulent activities and hacking. But at the same time, we have to have security across the front, across all the lines. So operational security, I think there are some areas where we fail, right? Sometimes people put security in the app and they don't have operational security. That means you put all your security in the app, but then you share passwords in the office. You do little things that are one person, you have key man risk. One person is responsible for developing the apps and deploying to whatever, and then the person leaves and then you don't change password. So little things like this are the things that are causing problems for the fintech ecosystem and allowing merchants and consumers to get into problems. But if we maintain standards, and CBN also begins to drive those standards by checking and making sure that people are really compliant, then we'll get to a point where there'll be improvement across the board. At OPE, for instance, we had to do security across the lot. Like, we tightened and hardened our systems, and we put security at the forefront. So you mentioned, Tony, that, oh, you don't like fingerprint and you don't like facial recognition. But that was one of the innovation for us, that when certain transactions are above a certain threshold, because the AI is checking whether this is according to your pattern of transactions, and when it sees that this transaction does not fit with your pattern of transactions, it requires that we need to do your facial or biometric verification before we allow that transaction to pass. These are security innovations that are really vital, that everybody should imbibe to protect the funds of the people that we serve. Thank you.
Thank you very much for your response. So I'll just ask a question, and please, any of the panelists, you can answer the question. You can answer this question. What skills for individuals and talent development initiatives are crucial to building a workforce that can drive fintech's contribution to a $1 trillion economy? I know that part of our audience, we have individuals as well that are asking themselves, what can I do to be part of, what can I do to contribute to achieving this goal of having a $1 trillion economy? So please, any of the panelists, if you like to speak to it, just unmute yourself and talk.
Yeah, I think that if I can go ahead, I think that one of the...
Please, you can.
Yeah, one of the key things is that we have to continually, as a country, develop local technology talent. And we have to develop it at a pace that is faster than the rate at which we are losing them. Today, lots of the tech talent in Nigeria are being shipped abroad. They're going to Canada, they're going to Germany, they're going to the US, and they're working for the likes of Facebook, Google, Amazon. And the only way for us to compete, well, we have to do that, compete in terms of pricing and remuneration. But at the same time, we have to produce those talents much faster than we see them exit. So, and this talent cuts across many areas, not just core tech, right? A lot of people think that to work in a fintech, all you need is technical skills. But apart from software and coding skills, there are cloud computing skills, there are AI skills that are needed, there are business analytics skills that are needed, there are compliance skills that are needed, there are settlement and reconciliation, accounting and finance. I mean, there are so many skills that are needed to make, there are legal skills that are needed to make things work. So I think that as we continue to improve ourselves and be committed to a development program that can help people prepare. One of the thoughts that came to my mind is that the way that banks, for instance, have training schools, right? We don't have fintech training schools in Nigeria today. If you're going to get into a bank today, you will go to the training school. no matter whether you have a first class or whatever, you still go through a training school and you are prepped up. I think that FinTechs also should adopt this kind of methods where lots of things can be done. And FinTech Nigeria can. I know CB has something on the CB Academy. I know the FSI has something, but we should look at more and more of this. Thank you.
Thank you so much. Please, that's the only response we can take on that question. We'll just go to, we are almost done. We are almost at our destination, please. I hope you're enjoying every minute of it. So we're going to have a product pitch at the moment, just for 5 minutes, by the CEO of Cocoon in person of Yinka Daramola. Please, are you on call? You have the floor. Yinka Daramola, please. Yinka Daramola, you need to unmute yourself and turn on your video. Okay, while we're waiting for Opin that is able to join the call in 1 second thereabouts. But while we're waiting, please, any of the panelists, would you like to add to what Dr. said regarding talent development? Do you have any additional thing to add to it? Yes.
If you don't mind me just adding, I think you really touched on all the key areas for Rashida here. I think sometimes people feel that the only place they can innovate is also in a fintech. And sometimes we're losing the entrepreneurship opportunities because even in large organizations, innovations are coming from employees and not just those who are just following the status quo. Those who are asking questions and just curious, like ask questions, why are we doing this? Sometimes they'll tell you that that's how we've always done it, but ask a bit deeper because the person might not even know, they're just doing what they were told. And you can literally sort of change things significantly in the organization, and the impact that you can make can be so different and really change, the whole potential of your organization. So yes, there's opportunity in the tech area. I think, Dr. rightly touched on all the skill set. Compliance, don't think compliance just because the regulator said it. Compliance is so critical that you have to think, what if, how do we protect the organization? Because this is really where, even in the tech startup space, the partners we're working with, sometimes this is where things are dropping off. And, you have to really think about, why is the regulator telling you to do this? Beyond the fact that it is very inconvenient and annoying, there is something they're trying to protect. And can you proactively then find a solution? You can actually even change the regulator's mind on some actions. I know it's difficult. I know sometimes they sit on a special place, but please, you'll be surprised that they're human. They really just want to protect, and asking questions, thinking about what their concern is and addressing them is probably even the fastest way to solve problems for organizations. Thank you.
Thank you so much, Rashida. That's a very valid point. Yinka Daramola, please, can we have you quickly?
Yes, thank you. I'm here.
Oh, great.
All right. So, Toyin, can I share my screen now?
Yes, you can share your screen.
Okay. All right. Thank you.
As the captain on this flight, I can assure you that in less than 10 minutes we'll be done. So please just stay. Well, please bear with us. We'll soon conclude today's event. Are you able to share your screen, please?
Yes, I am able to. I eventually found the button, so I'm sharing my screen now.
Oh, great.
Hello, Tony, can you confirm you can see my screen?
At my hand, it's still loading. I don't know. Can others see screen? Let's be certain that it's not my network.
All right, it's fully loaded now. So because of time, while my screen is
Please,
still
you can go
loading,
ahead. Yes, just go ahead.
All right, thank you very much. My name is Yinka. I'm the CEO of Cocoon. Cocoon is a consulting firm, largely a tech consulting firm, headquartered in Lagos. We have in several other places around the world, where we work with organizations, specifically in the tech area, in the tech space, organizations of all sizes. And what do we do? It's simple. We help organizations to make the right tech decision, either in procurement or in implementation or in making a decision to meet their business goals. So we have an offer currently, which we call QSA, is Cocoon Startup Accelerator. Basically, what problems are we solving? We understand working with quite a number of firms around the world, and Nigeria is not any different. We realize how tech and tech talents are a lot more expensive than most organizations can afford. Tech could be extremely complex, or sometimes tech could be very difficult to implement. Sometimes tech takes too long for most businesses to implement, and most businesses are too small, but with huge potentials. They are unable to realize their potential because at the very early stage of the business, they're too small to afford the kind of tech they need. So these are the companies we're looking to support. We have very critical partnerships locally and globally to bring the conversation to the same table with the businesses that are in the court that we're about to start. I think we have the adverts going on currently, but you can reach out to us on info@cocoon.com, basically. So it's an offer to bring you to the table, cost you nothing. We will be giving you free consulting hours, I think, for about 3 months, and we just want to nurture your tech. The companies we're looking at are maybe startups, tech startups, or most businesses that are tech heavy. All right, and you may be a big firm or a small firm, irrespective of the size. We just want to work with you, take you through that process for just free consulting hours for about 3 months, and see what is it we can do to support your business. Thank you. That's just the ask, and that's the offer to startups and tech-heavy businesses. Thank you. I hope I'm able to do it in my 5 minutes. Thank you so much, Tony.
Yeah, you tried with managing our time. So thank you for that. So if you're interested in doing business with Cocoon, I think you can send an email. You can send an email to info@cocoon.com. It's as simple as that. Thank you, Yinka, for gracing us this afternoon. At this point, I would like to call on Dr. Babatunde for the closing remarks.
Thank you, Tony. It's a pleasure to be here and to say thank you to all the panelists and Tony for a fantastic job done. There's no doubt that for us to achieve a 1 trillion economy, it needs to require skill. So I'm just going to speak to an aspect that's been discussed here. When you look at what has happened with the central bank now, banks' capitalization has increased because they want them to be able to operate at scale to achieve this $1 trillion economy. There's no doubt that it's going to come down the line to MFBs, to mortgage banks, to finance houses, and to FinTech's. It might not be this year, it could be next year, but it's something that we should start preparing for. And that's why the issue of consolidation, mergers and acquisitions are important that we start looking at it now, that we're not caught unawares. When there was the consolidation of banks in 2004, 2005, a couple of banks lost out because they were not ready. There were silo issues, there were ego issues. But I think that we should not be caught, that FinTechs play a major role in the financial sector. When we look at the fact that transactions on digital platforms have grown from 200 billion naira a few years ago to over a quadrillion naira, it means that there's a lot of contribution we are making, and we should not be caught unawares if we want to play the ostrich game. So I think that would play a very important role to achieving the $1 trillion economy, and we should prepare ourselves for all possible things that would happen. That's what risk management is all about too. So thank you very much for having you here, and for all our audience, we appreciate you waiting the time, and we thank Toyin for keeping the flight to land safely. So thank you everyone, and enjoy the rest of the day. Bye.
Thank you so much, Dr. Babatunde. And on the backdrop of every conversation we've had, I would like to tell you that we've come to the end of the FinTech Outlook 2025. Please, are you clapping? I need to see your hands. I hope you're clapping. And okay, so as the captain of the flight, distinguished ladies and gentlemen, captain of industry, CEOs, I'm happy to let you know that we've reached our destination. And as promised, it was a turbulence-free flight. We hope that when we call on you next year, you would be happy to join us on FinTech Outlook 2026 as well. Thank you so much for your time, and I wish you the best of the day, and enjoy the rest of your day. Thank you very much.
Take care.
You.
Bye.
Thanks, everyone.